Hi, this is Steve Westmark, Counselor Realty. Thanks so much for watching my video blog this week. I brought Jim Jessup in to talk about a new type of product that has been around maybe 10 years ago, but is now coming back to the market. Welcome, Jim.
Thank you, Steve.
Well, over the last few years, it's been very, very difficult. I think back to 2004 and 5, we had a lot of loans available for portfolio, which we're talking about. But then this terrible marketplace happened, and then we had short sales and foreclosures. How will portfolio loans help both the people with foreclosures and short sales? And how will a portfolio loan help maybe a business owner, which has really had difficulty over the last 5 to 7 years?
Okay. Well, Steve, the portfolio loan's really designed to serve an individual or a family that has had some credit challenges. They've had a foreclosure or they've had a short sale in their past, maybe even a bankruptcy. The conventional guidelines and FHA guidelines would normally require 3 to up to 7 years before they could qualify for a mortgage. The portfolio loan doesn't have that time requirement. They're much more focused on reestablishing the credit history, and as a portfolio loan, the lender writes the loan guidelines to their own terms and own guidelines. They don't have to follow the government guidelines for loans. So that's really the advantage, and there's some advantages likewise for business owners in that same way. They have some flexibility about the income calculations used for that portfolio loan.
I know another thing that happens with these loans is you have to look at credit scores. And so how are credit scores affected in this area? And how are down payments affected in this area?
A person needs to reestablish credit and have a good score. There's some guidelines we follow, but they do vary a little bit with each situation. The down payments are a function, again, of the lender has that ability to write different guidelines than the government. And so in order to help offset the risk of the loan, there's a larger down payment required. It's usually 20% or more based on the whole picture for the loan. Now, one of the advantages of a portfolio loan then is that you're always dealing with one lender, the same lender, and so when you talk to them, you can actually talk to the same person every time you want to talk about the loan, which is a very different situation than you do with a conventional or other mortgages. And that's one of the big advantages of having a portfolio loan is you get to talk to the same person every time.
Jim, I know that probably 20 to 25% of buyers out there today could be helped by this product. What's the best way for them to get a hold of you to talk about how a portfolio loan may help them?
Well, Steve, that's a really good question about the benefits and how to make this work. And so, because the portfolio loan has so many different characteristics, to understand if it really fits your own personal needs, the best way to find out for that person that's got a little bit of a credit challenge in their background or a business owner is to call me directly. And so the best way to reach me would be 612-860-8193.
Thanks, Jim.
Thank you, Steve.